Hi, I'm Pat Keown, a Senior Research Analyst with Lipper. I'm here to speak to you about fund flows activity for the week ended Wednesday, May 6th. We'll start this week's report by taking a quick look at the overall flows results for each one of our fund asset groups. As this first slide indicates, both money market funds and taxable bond funds took in net new money last week to the tune of $32.8 billion and $6.1 billion respectively, while conversely, equity mutual funds and muni bond funds suffered net outflows of $6.4 billion and $427 million. We'll take a look now at the week's market activity. Equity markets were down for the week. The Dow Jones Industrial Average, S&P 500 Index, and NASDAQ Composite retreated 3.9%, 3.1%, and 0.7% respectively. The majority of the losses suffered by the indices occurred during the first part of the trading week as the equity markets were weighed down by President Trump's threat of retaliatory tariffs against China, as well as the release of a flurry of poor economic data. On the economic front, consumer spending fell a record-setting 7.3% in March, and manufacturing activity in the U.S. fell to an 11-year low. In addition, U.S. corporations started to forewarn of the potential earnings carnage to come. Apple stated that it's impossible to forecast its Q2 results given the current economic landscape, and Amazon gave guidance that it's possible the company could record its first quarterly loss in 5 years. President Trump floated the idea of hitting China with additional tariffs as his administration started to explore ways to exact some type of financial compensation from the Chinese government for the manner in which it handled the outbreak of the virus. Stocks recouped some of the losses in midweek trading on the strength of parts of the U.S., as well as other countries beginning to awaken from their self-imposed coronavirus-induced economic slumber. Investor sentiment took another downturn at week's end as monthly unemployment data indicated that private employers in the U.S. had laid off more than 20 million workers during April. Total jobless claims attributable to the pandemic are now more than 33 million. These numbers have led the unemployment rate to be forecast to grow to a post-Great Depression era high of 15 to 16% after being at a 50-year low of 3.5% before the start of the COVID-19 crisis. Despite this week's losses, the NASDAQ, S&P 500, and the Dow all have solid gains for the quarter to date at 15%, 10.2%, and 8% respectively. Let's turn our attention back now to the fund flows activity. We're going to take a closer look at each one of the fund asset groups and explore the changes in more detail. First group we're going to take a look at is equity mutual funds. The $6.4 billion net outflow this week for equity mutual funds came from both domestic equity funds and non-domestic equity funds. Domestic equity funds saw $4.7 billion leave. Non-domestic had $1.7 billion leave. Net outflows on the domestic side were widespread and paced by the large cap core funds and multi-cap value funds peer groups, which had net negative flows of $1.2 billion and $1 billion respectively. For non-domestic equity funds, the emerging market funds peer group experienced the highest net outflows at $452 million. Our next group to look at is equity ETFs. This group also had net outflows last week to the tune of $9.2 billion. As the slide indicates, these net outflows were heavily concentrated. Spider S&P 500 saw about $4.3 billion leave. 3 other products all had over $1 billion in net outflows. These were the Spider S&P Dividend, the iShares MSCI EFA, and the iShares Core S&P 500, which saw $1.5 billion, $1.2 billion, and $1.1 billion leave respectively. On the flip side, Spider Gold ETF had the largest net inflow at just over $1 billion. Next group to take a look at is taxable bond funds. We'll start with the mutual fund side of things. Net inflows here again this week. For the 4th straight week, they took in net new money, just about $6.1 billion. The main contributors to these net positive flows were the ultra-short obligation funds and the core bond funds classifications, which grew their coffers by about $1.9 billion and $1.7 billion respectively. We'll move on now to the taxable bond ETF group. Net inflows here again last week. Taxable bond ETFs took in $5.8 billion of net new money. On the plus side of things, We saw a lot of money going into below investment grade debt products. The top three highest net inflows, all attributable to that. The iShares iBox Dollar High Yield Corporate Bond ETF, Spider Bloomberg Barclays High Yield Bond ETF, and the X-Trackers USD High Yield Corporate Bond ETF. Positive net flows of 1.6 billion, 450 million, and $455 million respectively. We'll move on now. Take a look at our Muni Bond Fund group. This group had net outflows last week, second straight week of net outflows for them. They saw $427 million leave their coffers after about $1 billion leaving the week before. Conversely to the taxable bond fund, or taxable bond ETFs at least side of things, we see money leaving the high yield funds. High yield muni debt funds, largest net outflows within this fund asset group last week at $637 million. While conversely, the highest net inflow belonged to short muni debt funds. Our last group to take a look at is money market funds. This group had net inflows again last week. As a result of the COVID-19 pandemic, money market funds have taken in net new money for the 10th straight week as investors continue to try to wait out the uncertainty. The group's total intake during this time period is more than $1 trillion. But this week's net positive flow of $32.8 billion is the smallest during this streak. So maybe the investing landscape is starting to return to some state of normalcy. The largest net inflows this week belong to two of the institutional peer groups, as institutional U.S. government money market funds and institutional money market funds grew their coffers by $16.5 billion and $10 billion respectively. That wraps up this week's report. If you'd like to take a close look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.